Joining our closing bell exchange to talk about all of that is Chris Cordaro from Regent Atlantic. Keith Bliss is here from Drive Wealth, and Rick Santelli, as always, with us from the CME Group in Chicago. Chris, would you chalk it up to better corporate earnings as to why the U.S. market is outperforming the world?
Certainly. I mean, the corporate earnings came in this season extremely robust, and that's really what drives things is the earnings. But if you're looking forward, where do I see the valuations and the growth likely to come from? I think the U.S. is reaching a peak, and it's going to be foreign markets, especially emerging markets, that really overcome and do better in the long run. And that's why I think they're probably one of the best places to be on the planet.
Now, isn't it? You're dipping in?
Now's the time to get there before everybody else does. If you think about the strong dollar means it gives us in the U.S. a big buying power to buy those emerging market stocks.
Rick Santelli, you said the dollar index was now the barometer for the S&P 500.
I think we are going through a phase where that's very true. I know everybody likes to look at the VIX as the fear gauge, but I think the dollar index and its path are very important because really, you could say this is all about trade, or you can describe a number of issues why the markets are acting the way they are. But it's the financial structure of everything that moves in the world, whether it's oil, whether it's soybeans, anybody who's ever done a delivery and all the financing involved in moving products or commodities. That whole structure is changing, and it's changing on the fly in dramatic fashion. So, yes, I think the dollar index, which really didn't do much today, but the key is it didn't give up any ground. And I think that you can continue to look at that to measure how much more this recalibration in finance and credit and deleveraging on deals in the here and now is going to continue to affect and spill over and affect the psychology of some investors.
Keith, it's not just about Turkey today because the lira is actually up and it's getting some help from Qatar. It's about China, which seems like a much bigger deal if things were to worsen. Is that a concern for the U.S. market going forward?
Always a concern for the U.S. market because China is one of those great barometers, the second largest economy in the world. We are concerned if they were to slow down from their stated goals of 6.5% to 7% GDP, whatever you want to look at. But I want to go back to something that Rick was saying and something that Chris was saying, and what you were talking about is there's a direct pattern linkage between an overbought VIX, which is where we are right now, a stronger dollar, and where the S&P 500 would be. A stronger dollar, and we get the dollar overbought at around the 98.50 level on the DXY, and we're at the VIX. Those are two negative signs for U.S. equity markets, particularly in the S&P 500. So that's something that I would very definitely keep a read on. We don't think the S&P 500 gets oversold until it gets down to around 2780, 2790. So not that far away. But there definitely could be some weakness in the offing here for the next couple of sessions.
Chris, do you think this is overdone? These concerns about what's happening over in Turkey or spill over into other emerging markets, currencies, et cetera?
Well, I think what's Turkey in itself is overdone because it's just not that big. It's just not big enough to really move. And so it's really about the perception of can it move things. I think Keith is right. You really need to look at China. You need to look at the larger economies to have some movement there.
And what is that telling you when you look there?
When I looked at it, I still see the growth coming from those economies in the emerging markets.
But it's slowing. The Chinese stock market's
but we're talking slowing to
6%.
We're talking slowing to 6%. I mean, that's still an extremely healthy growth rate for the second largest economy in the world. That's the part that always gets overlooked is just how big it is and how fast it grows.
Is this just a small, little momentary rest, and then we pick up, in maybe September? And that move back towards record highs?
Well, that certainly is my view. I mean, when you take a look at the lack of participation, which is typical for August, but we're at all-time lows when it comes to volumes that we see in the equity market, so the moves can be outsized. And when it comes to Turkey in particular, Turkey has some really bad fundamental problems that many of the other emerging market countries and economies don't have. They have runaway inflation. They've issued about 11% of GDP in foreign currency debt. So as the dollar rallies, that's really hampering their ability to manage their economy. And you're just not going to see that in some of the other economies, like Argentina just got the bailout from the IMF, and you're seeing them stabilize. So I think this is largely overdone if we're going to blame it solely on what's happening.
I mean, look at, it was the summer of 15, almost this exact time where we were all worried about China, devaluation of the currency, capital flight, et cetera. And here we are, August of 18, and we're worried about a problem outside of the United States. In some respects, you have to think that only underscores this sort of great American stock market economy story that we've been telling and leading to these levels that we've gotten to.
Rapid update. I just saw Steve Leisman tweet this out. 3.3% after that good retail sales. I mean, that is strong growth,
right,
especially coming off of a more than 4% economy last quarter.
Which is one of my bullish theses, if you will, around the U.S. equity market. Of course, the U.S. equity market is going to get hit when there are disruptions in other places around the globe, particularly when it's a one-on-one between President Erdogan and President Trump, which some of this is, as we know. But when you take a look at what's going on with the strong economic growth, with the strong corporate earnings that Chris cited earlier, it's axiomatic in finance that capital goes where capital gets rewarded. And right now, that's in the U.S. market. So this will be a momentary blip. And then I think we continue to rally through the end of the year, especially in September, Scott, as you mentioned, when people come back and start trading and investing.